Hey there, Ed McCormack here, founder of the crypto education platform, Dchained. In today's video, we're going to talk about a huge date that every single crypto investor needs to have circled on their calendar and ultimately could be the catalyst for the next bull run in the back half of 2021. We're going to cover all of that right now. So, as the title will tell you, we're going to talk about the release of Ethereum's highly anticipated upgrade, London, and it's happening on August 4th. Now, this upgrade is one that is years in the making, and as much as it's been anticipated and as much excitement has been generated, there's been a ton of controversy that have come along with it. We're going to talk about all of that right now. And the first thing that we're going to talk about is, what is this upgrade all about? So if you've been watching our videos and you're familiar with how Ethereum operates, it runs on a consensus mechanism called proof of work. So it operates in a way where anytime you want to add a transaction, there's a community of miners out there who want to solve some type of puzzle on Ethereum's blockchain to show that they're showing some type of resource allocation and not just gaming the system. They're then going to see your transaction, validate that it's real, it's accurate, you have enough money in your wallet to cover, and then they then add your transaction to the blockchain. This process is incredibly energy exhaustive. It's time consuming and creates a major bottleneck. You can only do a few of these a second. Comparatively, there's a new model, and it's one that Ethereum is moving to called proof of stake. And rather than relying on a select community, and usually these are people who either have access to massive amounts of computing software and hardware, sometimes even having factories of computers and servers, to essentially anyone who wants to pool together 32 ETH to then activate a piece of software that lives on Ethereum's blockchain in order to start the validation process from happening. Similar to a spark plug in your car engine. Think of the spark plug as this piece of software on Ethereum's blockchain. And in order for that spark plug to fire, it needs to have a certain amount of ETH used as collateral. And once that minimum, which is 32 ETH, is met, it sparks. It starts up that piece of software, and all of a sudden, you are now adding transactions to the blockchain. Now, why would you want to do that? Well, it's a huge opportunity to generate passive income. By you providing your ETH as collateral, you can earn anywhere from 8 to 10% plus annually from just using your ETH and letting it work for you. And to date, there was a beta that was released in early December in order to really create the foundation for what's about to come in August. And with this beta, which is really something that is not really highly publicized, but if you want to participate, there are a number of different websites and firms that allowed you to do so. It's created a scenario where roughly 5% of the overall ETH in currency is removed now from circulation. So with ETH now getting ready for this big upgrade on August 4th, the opportunities, the avenues for participation, just overall accessibility is going to get opened up really to the mainstream public. And the impact can't be understated enough, because JP Morgan is estimating that this is going to be roughly a $40 billion business, and most of which, almost all of which, will live on Ethereum. So we're talking about a huge amount of money that is going to get taken out of the circulating supply and locked away, ultimately creating a disparity between how much is available and what the demand is. And that, combined with the fact that this new upgrade is also going to reduce the cost of using Ethereum, it's going to be a big deal. So let's dive into that for a second. So if you've traded on Ethereum in the last 2 years, you know that those gas fees, those transaction fees that you pay in order to do any type of trade can go into the hundreds of dollars. Makes you ask, really, if I'm going to pay $400 to trade $50, is that really the future of finance? And it was one that really did not, go unnoticed by the overall Ethereum community. They knew they had to address it, but the issue is that you need to have certain pieces in place in order to really address it from a technical standpoint, from a cost standpoint, from an overall adoption perspective. And ultimately, we're almost at that stage now, coming to August 4th. And what that's going to present is a scenario where rather than, the miners charging an arbitrary amount and ultimately cherry picking which transaction is going to get put onto the blockchain first, depending on how much money you're willing to pay, there's now going to be a standardized fee called a base fee that's going to be paid to any miner who's going to add that transaction to the blockchain, plus a small tip on top. And where things get interesting is that a portion of that base fee is going to get burned, meaning it is going to get removed forever from circulation. Think about that for a second. One of the biggest draws for Bitcoin has been that it has a hard cap. There will never be more than 21 million Bitcoins ever in existence, ever minted. But what if I told you, rather than having a hard cap, the supply will always be going down moving forward? As more transactions happen, the less ETH will exist in circulation. It becomes what's known as a deflationary asset. And that has institutional investors, those large financial institutions and wealthy investors, going into a frenzy. You are starting to see a massive shift, not only in this spot market, but also these people buying up futures contracts on different marketplaces like CME Group and CBOE, where they project that the cost is going to climb significantly in the next 6 to 18 months, and they are diving headfirst into it. Ultimately, though, a lot of this is going to depend on keeping the miners happy. As I alluded to before, there's been a lot of controversy around this new upgrade. The reason being is that while it's great for investors where you're paying less money, the miners are receiving less money. So why would they want to do this? Well, the reason they want to do this, first and foremost, is they want to be able to have a transparent way of making money, but also be prepared for this new migration towards proof of stake, as many of them are going to be stakers. They're going to be running these nodes, which essentially are just servers that will host all of these different pools of ETH to run that software on Ethereum's blockchain. In order to get ready for that, they also need to make sure that they are keeping ETH operational leading into the upgrade and shortly thereafter, because it's not going to be flip a switch. It's going to take a couple of months. And a way to keep them happy, and ultimately a way to keep them from maybe doing things that are not in the best interest of Ethereum, such as activities like front running, where before you put your transaction onto the blockchain, these miners can ultimately see that that's a profitable trade, put themselves in before you, and then have you follow behind so that they might pay $1, but you pay $1.02. And in effect, they're making a nice little profit on any one of those trades. You don't want them doing that, especially if you want institutional investors to come in. They're going to want that all to be cleaned up. So what this new upgrade has created is this clause, and it's called EIP 3554. It's not going to be a pop quiz at the end of this. Don't worry. All that means is that the actual timing when Ethereum will be too complex for a miner to solve that puzzle before they can add a transaction will be too costly to do from an energy and a computing standpoint to offset the revenue that they would generate. So it's just not going to be a profitable endeavor anymore after a certain point, once that puzzle becomes too complex. And rather than introducing that puzzle, that they call it difficulty bomb, right at the onset on August 4th, they're giving these miners a runway all the way until December 31st, at which point everything will then shift over to proof of stake, and Ethereum will run on a whole new operational model at 100% capacity. So just to sum up what we talked about, this new upgrade should be exciting to anyone, even if you're not investing in Ethereum. Because one, it's going to make the second largest cryptocurrency a lot more scalable, a lot more affordable, and also much more energy efficient, which is going to have a network effect on all the other cryptocurrencies in the crypto market. So I hope you found this video useful. If you did, subscribe to this channel, pound that like button, and come check us out at Dchained.com to find out more about the different overviews, guides, and even crypto picks that we put out on a daily and weekly basis. So until next time, happy and safe investing, and I'll speak with you soon.